Hey everybody, welcome to Money Law. My name's Yasha Saba, and we're going to talk about today the housing bubble. Do we have a housing bubble? Is it housing bubble 2.0 like what we've seen in the last recession? Or is this something like we've never seen before? Real quick, before we move forward, don't forget I'm a licensed attorney here in California. So any information I give you, it's all for educational purposes only. If you are in other states and we're talking about laws, regulations, and how that affects you, it might not affect you the same way as it does for residents here in California. And even then, for those of you that are here in California, reach out to me if you need help. Ask me questions, because even some of the education I give you here might not directly apply to your situation. I want to know, are we in a housing bubble? What's about to happen with housing when all of those foreclosures, the forbearance, all of those government moratoriums on evictions, when it all just stops? What is happening and what is about to happen? Let's start about talking how we got into where we're at today. Right once the government shut everyone down for COVID-19, they immediately passed a bill called the CARES Act. Most of you might know this. This was that $3 trillion bill that gave money out to everyone, but it did another thing. It helped everyone that owns their home to be able to go into forbearance for a 6-month period of time. What does it mean when you go into forbearance? Forbearance means I'm not going to be delinquent on my loan, but I can't make my monthly payments. So you call the bank and you say to them, hey, I'm going through a financial situation right now. I need to push pause on the monthly payments that I make for my loan. And usually in the past, without the CARES Act, what would happen is the bank would say, yes, we don't want to foreclose on your home. We want you to stay in your home. We're going to let you forbear. We're going to let you say no monthly payments are due for a certain period of time, but the interest will continue to accrue. What's so great about the CARES Act is the law that Congress had passed says you can forbear on your home mortgage for up to 6 months without accruing any interest. So a large number of the population, mostly everybody that owns their own home and lost their job, they called their bank and they said, I can't pay. And the bank said, okay, let's have you forbear. No interest accrues, no penalties, nothing to your credit score because the law protects you. And they gave you a 3 to 6 months period. Now, many people that were in forbearance, they're coming to the tail end of that 6 months. And the question is, what happens next? Well, the CARES Act doesn't really say what's supposed to happen next. So in theory, you have a balloon payment. If you missed 6 months worth of your mortgage and you haven't paid it, that's going to expand. However, if you talk with your bank, don't be afraid. Most likely what they'll do is they'll take that 6 months worth of your mortgage payment and they will just take it and tack it on to the end of your loan, extending the term of your loan by 6 months. You might agree to a little modification of the loan. That's okay. But this way, all that money that you saved or that you couldn't even save because you lost your job, now it's not due and life gets back to normal. That's the theory. But for a lot of people, they still cannot pay back their mortgage because they're still out of the job. And the CARES Act doesn't protect them further than 6 months. So now this is the part we're waiting to see what happens in the market. But for those of you in this boat, you still shouldn't have any fear at all. You need to call your bank and continue working with them. The banks will still allow certain people to either forbear their loans. I know a lot of banks that are helping people refinance their loans to make that monthly payment more affordable. But if you're one of those folks in the boat that has done nothing, then it's really you're in control of your future and your life. And if you can't pay your loans and you haven't notified your bank of your financial troubles because of COVID, there's only so much that they're going to be able to do for you. That's the CARES Act. That's forbearance. If you're one of those people, you still have options. Not all of us are screwed. In fact, the federal government and the Federal Housing Authority have both said that there is a moratorium on evictions and foreclosures until the end of this year. So far we're all safe. Our homes are not going to be taken away from us. But how are we going to get out of this mess? There's one statistic that came out that I found very interesting, and it said as of the beginning of August, 30% of people, homeowners and renters, 30% could not make their housing payment. So we're talking people who couldn't pay rent, and we're talking about people that are in forbearance on their loans, or they're just not making payments on their loans, whether they're in forbearance or not. That is a very huge number. That's a scary number. If that many people can't make payments on their rent and housing, what does that say about our economy that's been floating this whole time by government subsidies as well as injections of cash from the Federal Reserve and whatnot? But what does that mean for you come January 1, 2021? A lot of analysts are saying that there is a looming crisis. There is a bubble growing, especially when a statistic comes out in August that says 30% of households are delinquent. What they were saying from their survey is roughly 1/3 of households in the United States have not paid their rent or have not paid their mortgage. Either they're in forbearance or they just haven't paid, right? And that's a scary number because that's a huge number of people not paying one of the most essential items of their lives, a roof over their head. What happens next? Well, if you're renting, chances are you're gonna get evicted because at some point, if you're not paying your rent, your landlord needs to make payments of their own. They've got to put a tenant in there that's going to actually pay rent. So if you can't pay your rent, you will eventually be paying your rent at some point in time. And get this, for those of you that are renting, there is no such thing as forbearance for rent. You just can't get evicted right now, but that doesn't mean all this rent you haven't been paying is going to get paid. You are going to have to pay it all back at some point, and a landlord doesn't have as much resources or flexibility as a bank does. So be aware of that. For those of you with a mortgage, maybe you come up to that 6-month time that the CARES Act allows you to have to go into forbearance. Maybe you need to continue your forbearance. That is going to be a conversation with your bank. So here is what I'm seeing is happening in the markets right now. First, obviously, everyone's refinancing because if your mother hasn't told you yet, the interest rates are a lot lower than they've ever been before, and the Federal Reserve rate is at 0%. So interest rates are coming down like crazy. It's time to refinance, lower your monthly payment, make your life more affordable. That's great. Some banks' interest rates have gone slightly bit up, but they're still at a competitive rate. They've gone up because so many people are diving into the pool to refinance their loans. So there are some people that are saying, I'm gonna wait. I have clients that are saying they're waiting until July of 2021 because they think there's a possibility interest rates could come lower. There are people saying, I'll do my refinance now, and if it goes lower in a year, then I'll refinance again, which you can do. There's no stopping you from doing that. So that is more personal preference. But we do see a massive amount of demand for refinancing of loans. So banks are still getting business done, if that makes sense. Next thing we're seeing is there is a huge drive to leave cities. So where are we seeing housing prices drop, like actually drop? We're seeing it happen in New York. We're seeing it happen in San Francisco, Chicago, all the major cities. People are leaving the city because they either don't want to pay rent anymore, and now they can afford to buy a house outside of the city because their work, they're untethered, they can be virtual, or because COVID has shut down, we're not spending money on restaurants, we're not going to Starbucks every day. All that money adds up. A lot of people have been saving a lot of money and now they can afford a down payment. Why didn't they do that to begin with, right? But these are the trends. There's so many little micro trends that are adding up. We still cannot measure them completely. So anytime I hear an analyst say that there's a housing bubble looming, I take that with a grain of salt because with COVID, with a moratorium on evictions and foreclosures, there's no real hard data letting us know that people actually can't make their payments or they're choosing not to make payments and they're deciding to use the CARES Act as an advantage, as an opportunity to save money or an opportunity to save on taxes, what have you. So a lot of people are making moves, that's for sure. And we do see asking prices around cities, metropolitan areas go down, but even in San Francisco, the prices are still up higher than a year before, just not as dramatically as they would expect to be. In the suburbs, on the other hand, the rural communities, the suburbs right outside of the cities, there's a lot of movement going on. In fact, housing prices have gone up tremendously, especially throughout California. Housing prices are still going up. Interest rates are low. There's people that want to start their families that couldn't afford their monthly payment with a 4% or higher interest rate, but now at 3%, 2.75, 2.5%, they're getting killer rates that they can afford. So they're moving. And because of that, there's an increase in demand and supply and demand of economics. When there's a lot of people asking for one thing, the value of that one thing is going to go up. And this is where people believe that is the bubble. There's a lot of movement and mobility happening because of COVID has changed the way we work and live, some people more permanently than others. And that is causing us to revamp our lives, revamp where we live. Some people are leaving the coastal areas and going inland. Some companies are shutting down their offices altogether. Another concept that kind of scares people into thinking there's a bubble is, I would say, the biggest crisis that we have right now is not residential housing, it's commercial real estate, commercial property. If we can do everything virtually, why have an office space at all? So you'll see a lot of commercial real estate, a lot of corporate office space in big cities are going to be empty and vacant. That is where we see a crisis that even before COVID, analysts have been saying there's going to be some kind of market correction or some kind of bubble there. And historically, what we've seen is when commercial real estate, corporate offices, small business real estate, strip malls, that kind of stuff, when they start to go down in a regional area, residential will follow. But here's where I say, I don't know if that applies anymore, because something different has happened in the year 2020. Something dramatically different that has never happened before. We are all virtual. We're all on Zoom. We're all on YouTube. Everyone is collaborating one way or another virtually, and then maybe doing something physical in our lives, whether with work or with family. But for the most part, we're all working virtually today. And COVID has kind of been the catalyst of doing something using the tools we've already had in the past, but teaching all of us on a grand scale to do this more permanently. And right once we all get used to doing something permanently, we never really look back and say, let's go back to the way we used to do it. No, we're humans, we adapt, okay? We evolve. And because of that, does it look like commercial real estate is gonna go back to what it was in 2019 and before? No, not at all. And this is where we're seeing a crisis happening. What's gonna happen with all of that empty space? Are all of those office spaces gonna be converted into residential? If that's the case, we desperately need the housing, but it's supply and demand. When all of a sudden you have a large supply of housing coming in, then prices will drop. That doesn't mean demand will drop, but then it can freeze up a lot of growth and gains that people have earned over time and were banking on for their retirement or for their financial security. So that's something to think about. We don't know what that means. We are in a whole new market, a whole new world, and usually when a bubble pops, it pops because of something unknown has happened that we cannot or have not anticipated. So here, for those of you wondering, okay, what do I do? Do I buy a house now, Yasha, or should I sell my home? Or is it okay for me to keep forbearing on my loans? Is it okay for me to stop paying my rent? Here's what I have to say. First, don't stop paying your rent, because that is a contract that you owe to your landlord. And even though your landlord can't evict you now, your landlord most certainly can evict you come 2021, and all the money that you owed for this year that you haven't been paying, they can hold that against you. And it's not likely that the government is going to give you some kind of bailout for that money. Right now, the government is talking about a bailout for restaurants. I don't hear them talking about a bailout for landlords, and I don't hear them talking about a bailout for tenants, okay? They are just giving you flexibility for you to figure out your financial situation and put yourself on a better path. But if you think that better path means you'll never have to pay rent again, my opinion, you are absolutely wrong, and you better correct that notion so that it doesn't bite you in the end, okay? For those of you that have your mortgage, you need to go into forbearance. The CARES Act protects you. It cannot touch your credit score. They have to give you at least 6 months. Most banks start at 3 months. That's okay. And then at the end of 3 months, they'll give you another 3 months. The CARES Act awards you 6 months. After that though, it's up to the bank to decide if they want to allow you to continue forbearing, but they can't put you in foreclosure. So see how the laws kind of play to your advantage here. Even though they don't have to allow you to forbear, they can't put you in foreclosure. So chances are they will allow you to continue to forbear. But remember, they're going to get very nervous on what to do next with you. They probably won't have you have a balloon payment like renters are going to have at the end of this whole moratorium on evictions and foreclosures, but they might ask you to refinance, or they're going to add that to the tail end of your loan, whatever you haven't paid yet. So I feel like in this economy, homeowners are actually going to fare out a lot better than renters. And we do see a lot of renters going into home ownership, and this is a good time to do that. Interest rates are low. You do have payment options if you lose your job, so you don't have to worry about security because the CARES Act gives you that security. And if you catch COVID, you're also protected. The federal government has done a lot of work to make sure anyone that catches COVID doesn't get screwed over. But in terms of our bubble, it is way too hard to tell, way too hard. So this has been another episode of Money Law. If you like what you're hearing today, you like to learn more, we do these videos regularly and we try to focus on hot topics that will truly serve you to get educated about. Subscribe to our channel below or follow me on LinkedIn. My name is Yasha Saba. Remember, is it your money or theirs?